What's up, guys? It's time to make another video from the basement instead of the car. Bought a laptop finally, turned on the webcam. Sure enough, the webcam sucks, so I'm back recording on my phone. At least the iPhone has good quality. Anyway, I'm making a video today as I was doing some research and some digging on my dividend paying stocks. I looked further into one of my monthly payers and could not deny the success of it, and I was very impressed with what I researched. So I figured this was one that it's worth making a video on. This stock is Main Street Capital, ticker symbol MAIN. Again, it's a monthly payer, and first, I'll start and go through a couple things about the company. Then we'll go through their income statement and balance sheet, and then I'll show you what this gibberish is over here. So some of the company facts I wrote down is their company objective is to, well, first off, it's in the financial services sector, and it's in the asset management industry. Their objective is to maximize their portfolio total return by generating current income from their debt investments in lower middle market companies, capital appreciation, dividend income, and realized gains from their equity and equity-related investments. They were founded in the 1990s, pretty new company. They were founded in Houston, Texas, where they are still located. They provide capital to private U.S. companies. They have investments in 182 companies. Their average investment size is $11.5 million, and they are well diversified across the U.S. and industries. Some financial information that I wrote down. They have over $4 billion of investment capital under management. Again, they pay a monthly dividend. Everyone loves a monthly dividend. Who doesn't like getting paid every month? Quarterly, yeah, it is what it is, but monthly, forget, you can't compete. They have raised their dividend every year since 2011, so 7 years straight, and I don't expect that to stop. Their average increase has been 4.18% over the last 5 years. Their current yield is 6.13%. So you buy today, based on the stock price, you're already getting the 6.13% yield. Where can you find that? Their payout ratio, not that great, 92.5%. That is probably the only red flag that I saw in looking at this company. But we'll just keep that in mind. They used to pay 2 special dividends a year. That has since been discontinued as of this year. Well, this is the last year they're paying the 2 special dividends, and starting next year they will spread what they were going to pay over the next 5-year dividend for the monthly dividend. The top 5 holders of institutional holdings for this company are Burgundy Asset Management, number 1. Price T. Rowe Associates, number 2. Macquarie Group, Ltd., number 3. Muzinc and Company, number 4. Bank of Montreal, Canada, number 5. And they barely make up 1%. So that's good. They're not top heavy into one company. Now let's talk about their income statement and balance sheet. So their revenue. Over the last 4 years, 2014, their revenue was $117 million. 2015, $132 million. 2016, $145 million. And last year, $169 million. That's growth every single year. It's going up every year the last 4 years. So that's a great thing. It's also almost double digits every year as well. Their gross profit is the same as the revenue, as they had no cost for their revenue, so that's good. Net income, also looking very pretty. $101 million in 2014, $104 million 2015, $139 million 2016, $171 million 2017. Again, up, growth every year. Last year's growth was 22%. I like that. How about their debt? We like that? No, but whatever. 2014 debt, 707 million. 2015, 780 million. 2016, 840 million. 2017, 797 million. I mean, yeah, obviously they're gonna have debt because they give out loans, so they borrow money to make money. Their debt was going up and then it went down a little last year, so let's hope it stays on that track. We'll see what 2018 looks like. I guess their debt could be another, red flag that we need to consider looking at this company. How about cash? For whatever reason, 2014 they had 60 million, and then went down to 20 million in 2015. 2016, 24 million, went up. 2017, 52 million. So it's going up again. That's good. We like that. Anyway, back to the dividend conversation. Again, this is a monthly payer. I know everyone loves a monthly payer. Let's go to my beautiful chalkboard. So if you look at the dividend history, I went back to 2013. Their annual dividend was $1.87. 2014, their annual dividend was $2, obviously going up. As we said, they've raised the dividend in the last 7 years. So 2015, 211, 2016, 218, 2017, 224, 2018, 230. Growth rate, 6.67%, 5.5%, 3.32%, 2.75%, and last year's this year's was 2.68%. Awesome growth, right? These are the special dividends that I mentioned that are, these were combined. Well, 2013 was 3. These, 2014 till this year, they were split into 2 dividends. This is going away, but they said they're going to spread it amongst the monthly dividend over the next 5 years. That's good. I like that better actually, because I don't even count special dividend as part of my income coming in. I rely on the consistent monthly or quarterly dividend income as my actual income. This is like a bonus that you can't expect every year. So, as I mentioned earlier, their average increase for their dividend over the last 5 years was 4.18%. Now, their stock price increase average over the last 5 years was 14.49%. So, if you buy 100 shares today, right? The current stock price, which I did write down, is $38.16. So if you buy 100 shares today, that'll cost you $3,816, right? A lot of money. Broke investor channel, broke people listening, I hope. Not that I hope, but I'm assuming. So, that's a lot of money. But let's just say you could afford it and this is what you do. So you purchase that this year, you can make you would have made $234 in dividends, and your yield on cost, again, that's the yield. That's the dividend yield based on the purchase price that you got in. So your yield on cost would be 6%. Rounded up. Or rounded down or up, whatever way. So let's look, based on history, if we take this as the average each year, and we hold this stock for 20 years, in 2038, your capital will then be $57,182. So obviously we're dividend investors. We don't sell, we don't take the capital gain, but this is awesome. This is great to see. If the dividend increase goes up based on history, your annual will be $531. This part not as impressive, but I would expect a lot higher annual increase, than what is presented here, especially if the stock price continues to increase based on the previous history. Now, even with that non-impressive dividend, your yield on cost in 2038, in 20 years, will be 14%. What that means is you'll have your money sitting there and you're guaranteed, not guaranteed, but if they pay their dividend as they're supposed to on a monthly basis, each year you're automatically getting back 14% on the dividend. So this is cash coming in that you can do whatever you want. Your capital is not being touched. However, if you want to sell for capital at that point, so be it. You know, you're making 53,000. So that's not too bad looking at this. If you want to talk about monthly, the annual, obviously, right here, this is in 2018, your monthly dividend would have been $19.50 each month. And right here, you would be getting $44.26 each month. Again, not that impressive, but keep in mind, this is without dividend reinvestment. If you reinvested all of those dividends, these numbers through the roof. So again, you can do the DRIP if you want. It's called DRIP, by the way, dividend reinvestment plan. But you can do the DRIP if you want. You can invest in something else. But this is just how it would look without the dividend reinvestment plan. So I just wanted to talk about this stock because it really, really impressed me. When I look at a lot of monthly dividend payers, none of them really look that impressive. I know I did do a video on APLE. That's also a monthly payer, and that also had impressed me, and it's actually my largest holding. If I could figure it out, I'll plug in the link below this video if you want to check it out. But anyway, again, everyone loves a monthly dividend payer. Everyone loves a dividend, increase every now and then, every year, and everyone loves capital gain as well. So, again, my channel's about the everyday person who is not necessarily rich. You're not going to see cars in my videos. You're going to see an old ass chalkboard written on it with sloppy handwriting, with bad quality, videos. But that's for now. You invest what you can. So I'm sharing my journey as I learn more and more each and every day. What to invest in. Obviously, not everyone can start out being rich. So I want to share my journey, from being a broke investor to a wealthy investor. And hopefully I can teach at least, some people here and there. They learn a few things from me. So I hope you guys enjoy this video. And as always, I am not a financial advisor. I'm not a professional. This video is for fun. So, that's that. All right. Thanks for watching.